Hi, are you thinking about investing money in the stock market? Or do you want to start investing money in the stock market but don't know where to begin? Then you need to watch this video. In this video, I'm going to be talking about the 4 steps that you must follow before you start investing money in the stock market.
Get strong.
Hello and welcome to The Nimble Nomad. My name is Arjun, and on this channel we talk about the tips, tricks and hacks to survive and thrive in the UK. In case you're new here, on this channel I talk about a lot of different things covering from UK personal finance to immigration to a whole bunch of other topics. All of the topics that I talk about on this channel are completely based on my personal experience and my own personal journey of being a first generation immigrant in the UK. So this is going to be a slightly different video to what I usually cover, which is a bit more focused on UK specific topics. But in this video, I want to talk about some basic steps on investing money in the stock market. So as a first generation immigrant, one of the key things for me in order to be successful in the UK is to be financially independent. And one of the strategies that I'm deploying in order to become financially independent in the UK is to invest money in the stock market. Now, the reason I'm doing this is so that, the money that I earn through my day job actually works while I'm sleeping. And basically it's not just sitting idle in my bank account. The reason I'm making this video is because I often talk about investing and passive income with some of my friends and colleagues. And some of them have asked me, Arjun, I want to invest money, but I don't know how. What do you actually do when you want to invest money? Or the other answer that I'll get when I ask or talk about investments is, oh, I invest money. So I ask the people, generally, how do you invest money? What is the process that you go through to invest money? And the most common answer I get is, oh, my friend or my brother or my cousin recommended this company to me, so I'm investing money in them. Or I'll get another answer, which is, this company is so famous, but the stock price is super low. So therefore, I think it's going to definitely grow in price over the next year or 6 months. Now, for me personally, those kind of statements are not actually investing. So I thought that I would make a video based on my own personal experience on the process of what I follow in order to invest money in the stock market. And I personally think that everybody should at least adopt a percentage or portion of what I'm talking about in this video in their own approach to investing money. Now, before I jump into the main content of this video, I do want to share a clip of Warren Buffett, the world's most famous investor, because I think that this clip has some really solid gold knowledge in it. And he's repeated these sentences or this knowledge over several videos, but I do think it was set good context for this particular video.
We are here in Omaha, Nebraska this morning with Warren Buffett, the chairman and CEO of Berkshire Hathaway. He's just released his 55th annual shareholder letter to the shareholders over this weekend. And this is actually the 13th year that we are now in Omaha talking to him after that letter. This is a show that we call Ask Warren, so that people can write in their own questions to Mr. Buffett after they've read that shareholders letter. But obviously this morning, given the news, there are a lot of other questions that people have concerning the stock market. Let's jump right into it with Mr. Buffett, who is here with us right now. And Warren, thank you for being here today. It's good to see you.
Thanks for having me.
I want to talk about the letter. Obviously, one of the things that you touch on in the letter is when people should be buying stocks. We're going to dig into a lot of it, but when you're looking at the futures down about 818 points this morning, I think probably the first thing viewers want to hear from you are your thoughts on what's happening with the coronavirus, if this is a reason to panic, and if you are worried about this.
Well, I don't know I have any special thoughts beyond the news on the coronavirus. The very first day I bought stocks was March 12th, 1942. And the stocks were down about 2% that day, as it turned out. Unfortunately, I bought in the morning, so when I came home in the evening and my dad told me the execution price, it was down 2%. But, if you're buying a business, And that's what stocks are, businesses. In fact, people will be better off if they say, I bought a business today, not a stock today, because that gives you a different perspective on it. Then presumably you can buy a farm, if you buy an apartment house, if you buy a business, you're going to own it for 10 or 20 or 30 years. And the real question is has the 10-year or 20-year outlook for American businesses changed in the last 24 hours or 48 hours? And you'll notice many of the businesses we own, partially own. American Express, we've owned it for 20 years. Coca-Cola, we've owned it for 40 years. Those are businesses. And you don't buy or sell your business based on today's headlines. And if it gives you a chance to buy something that you like and you can buy it even cheaper, then it's your good luck, basically.
Although there are a lot of people who look at the market and they say, look, I want to buy, but I don't want to buy when the market's sitting at new highs, when it's been hitting new records every day. Maybe it's off 800 points this morning, but maybe there's more of a decline to come because the effect of the coronavirus is going to be an impact on the global economy. IMF said that over the weekend. You are going to see weakness as not only China, but other countries try and address this. You're right, it may not change things over the 5 or 10-year span of things, but if I think that I can buy something for potentially 10% cheaper, maybe more than that if I wait a week or a month, maybe that's what I'm sitting around.
Well, if you think that, then you're going to get fabulously rich if you're right. All you have to do is just keep buying at 10-day intervals and keep taking your 10-day prediction. If I knew what the market was going to do, obviously, but you don't. I don't think anybody knows what the market's going to do. I think you do know whether you're making an intelligent purchase at a given price. Everybody, when they buy a stock, if you're going to buy, say, General Motors that has 1,400,000,000 shares out, you should be able to take a yellow pad like you have there, and on one page say, let's say it's selling for 30. It isn't selling that low, but that'd be 42 billion. You should say, I am buying the General Motors company for $42 billion because, and you should get it on a piece of paper. And then if you want to have a separate piece of paper, it says, I think I know what the stock market's going to do, so I know whether it'll be higher or lower in it. But you don't have that.
But if I worry that the economy is going to slow down, not just for the quarter, but for the year, that would impact how many cars I think they might be able to sell or even produce.
I'll guarantee you cars are going to slow down someday. In 1932, General Motors had 19,000 dealers. That's more than all the auto dealers in the United States today. There were only 125 million people then, but they had 19,000 dealers. They produced or sold, and there was 1 month, I think, when they sold less than a tenth of a car, right at a tenth of a car per dealer. That was a terrific time to buy General Motors. and forget about the market. If you can predict the market, you don't need to read balance sheets. You don't need to read anything. You certainly can't predict the market by reading the daily newspaper. That is for sure. And you certainly can't predict the market by listening to me. But you're buying businesses. And if you had planned to buy a local service station yesterday and it was closing day, I don't think you'd tear your hair out or anything like that. You'd have already looked at where it was located and the contract that it had with the suppliers and made a decision on competition. People, because they can make decisions every second in stocks, whereas they can't with farms, they think an investment in stocks is different than an investment in a business or an investment in a farm or investment in an apartment house. But it isn't. If you get your money's worth in terms of future earning power over the next 10 or 20 or 30 years, you're going to have made a good investment. And you can't pick them from day to day. If you can do that, you can, well, I haven't met anybody yet that knows how to do it.
So that was Warren, and as you can see, the guy is clearly sharp even at 90. And this video was actually shot back in March at the start of the pandemic, and that resulted with all the volatility that we've had in the 2020 stock markets. But basically, if you take a step back, to summarize, there's 3 valid things that he's talking about in this video. So point number 1 is no one knows what's going to happen in the stock market. Point number 2 is that when you're buying stocks, you're not actually buying a stock, but you're buying a piece of a business. And number 3, in order to buy a business, you must actually be able to understand what the business does and rationalize in your head why is it that you're buying a business? What is the reason for you to want to pay a certain price to buy a business at a certain point in time? Now, these 3 points are really, really important because they set in context what I'm going to talk about as the 4 basic things that you must do before you invest money in the stock market. Now, Warren Buffett has repeatedly said that if you're buying a stock or in the stock market, just because of historical price and what the price has done over a period of time on the graph, then you're basically just gambling. You're not actually investing money in the stock market, you're gambling. So on that basis, let's get into what are the 4 basic things that you must do in order to invest money in the stock market. So on the basis of what I just talked about in terms of summarizing that video, there's basically 4 things that you must do before you invest money. Now, before I explain each one of them in detail, I'm just going to summarize them. So the first one is you must budget. So you must define a budget of how much money you're going to invest in the stock market, whether it's monthly, weekly, annually, whatever, right? So that's the first thing. The second thing that you want to do is you want to learn to invest. So you want to invest in yourself a little bit before you start investing. The third one is that you need to research what you're going to invest in. Are you going to invest in an index fund? Are you going to invest in a particular company? Why are you going to do it? And then finally, the fourth and most important thing is to rationalize all of that information on the basis of the previous 3 steps and write down why you're going to do it. So let's get into each one of these a little bit more in detail. So the first thing that you absolutely want to do is you want to define a budget for how much money you're going to invest in the stock market. Now, the reason why this is important is because what you don't want to be doing is taking your entire monthly income and putting that into the stock market thinking that it'll magically go up, because that doesn't happen actually. So what you want to do is you want to define a budget, which is, okay, I have X number of amount of income that comes in. Of this, I have Y, which has to go out in the form of my monthly expenses, and of the remaining, this is my discretionary spend and savings, of which I'm happy to invest this money because this is capital at risk. Basically, this money can go up and down over a period of time. So if you need this money over the short term, I'd recommend not investing it, because investing is a long-term game. Basically, you need to be in it for the long term, which is a 10, 15 or 20 year horizon. You can't say I'm going to invest today and the money better be up in a year's time because I'm going to use it for something. If you're going to do that, investing is not for you. So it's really important that you define a budget. In case you aren't familiar with how to do a budget or have never done a budget, I recommend watching a video I did. I'll add a link of that there. But you absolutely need to write down what you've done. So this is a key takeaway from this step, which is write down what your income is, write down what your expenses are, and what is it that you're okay with spending each month on investments, so that these add towards your passive income. Now, don't tell me that you know in your head how much money you're going to be spending each month, because that is not a budget. And also, in case you're struggling with actually coming up with an Excel format of how to do a budget, I've got a link in the description below which will help you download the template for a monthly budget. Okay, so step number 2 is learning to invest. Now, this is by far the most important step of my 4-point plan. Because ultimately investing is not just about putting money blindly into the stock market, but it's also about enhancing your own knowledge of the broader business world and the stock market. So by doing this, you're basically expanding your own horizon and knowledge. So often when I talk to people about investing money, what they'll say is, I'm just going to put money into the stock market and magically that money is going to grow and expand. But that's not actually true. People who find good opportunities within the stock market are the ones that actually have their money grow over a long period of time. But if you blindly put money into a stock market or a particular business or stock where everybody else is putting their money in, there's a very high likelihood that you will lose money in the stock market. Now, if you don't know what to read or how to start learning how to invest, then there are 2 books that I really recommend. The first book is this Intelligent Investor. This is by far considered the Bible of investing, and it's a book that Warren Buffett himself has often recommended to new investors or generally anyone who wants to get into investing. And the other book that I really recommend is this one by Peter Lynch, who's one of the most famous investment fund managers at Fidelity Magellan Fund. So One Up on Wall Street. I'll add links of both of these in the description below in case you're interested in buying these. Keep in mind there'll be affiliate links, so if you use that link, I'll get a small little bonus off of that as well. Okay, step number 3 is researching investments. So this is an easy step, but a lot of people get disheartened by the amount of work that's actually involved in it. So this basically, just to put things into context, Warren Buffett famously said, some guys read Playboys, I read annual reports. And that's such a powerful statement, because ultimately, if you don't actually understand the nitty-gritty of a business that you're planning to invest your money into, then I don't understand how you're actually investing money or how you expect your hard-earned money to grow over a period of time. Now, a lot of people want to skip this step and they just want to, watch videos or just jump right into whatever the next person is recommending or whatever the stock market is saying. But ultimately, money is not made where everybody is putting their money in. It's made in the annual reports, in the text and the fine print of the numbers that are in the annual report. And I actually have found a lot of information in the annual reports which people don't understand or the mainstream media doesn't talk about. So this is a really important step. So just to put things into context, right? Let's say you wanted to invest money in Coca-Cola, right? Just Warren Buffett actually invests in Coca-Cola. So let's say you wanted to invest money in Coca-Cola. The one thing that you want to do is, as part of this step, is you want to identify what market does this Coca-Cola play in? Who is Coca-Cola's competitors? So is the company making money? This kind of information you're going to get in the annual report. And then finally, what is the broader news around Coca-Cola? Have they had any lawsuits? What's legislation or government doing? Are they coming up with some new products, right? What is the revenue from these new products and the existing product line? All of this information you can get through annual reports, investor relation websites, through some basic research on the internet, and it's all free. All of this information is free. But if you do this research, you'll be confident in the fact that, okay, I have put $100 or £100 into Coca-Cola and I am confident that my investment will stand on its own. And this is really important. So I think this is the most important step, but I think just spending some time after you've identified which company you want to invest money in and doing some research on that company is a really important step as part of my 4-step plan. So step number 4. So this is now the fun part. This is where you rationalize. So you've identified how much money you're going to spend. You've identified, you've built your knowledge of how to invest, and you're going to constantly enhance it. And then you've identified a set of companies that you want to put your money in. So now you're saying, okay, I've identified these 4 or 5 or even one company that I'm going to confidently put money in. But before you do that, you just want to take a piece of paper, and Warren Buffett said this in the video very clearly. Take a piece of paper, write it down, or maybe open up a Word document on your laptop and write down what is the company, how much you think the company is worth in your opinion, why you think the company is worth whatever it is, and you're willing to pay for it. And that will just, it doesn't have to be too long. It doesn't have to be pages and pages of it, but just one simple page of why you think you're comfortable with putting your hard-earned cash into this company in the stock market, because this is the most important step and it will give you the confidence. And I personally do this for almost all of my investments. I have different documents on my computer where I've written out what I do, what I think that the company is worth, and why I'm buying that company. So I think this is a really important step, and this will help give you that confidence before you invest money in the stock market. So those are the 4 steps. I'm sure a lot of people who have stayed up with me up until this point are thinking, oh my gosh, that is a lot of work. but I have to say that nothing in life comes easy. You have to work hard, but I assure you the hard work does pay off in the long run. I know that for a few people who aren't familiar with reading annual reports and aren't comfortable with it, they will find it a bit hard in the beginning. But I assure you, once you go through that process a couple of times, you will start to enjoy it, because ultimately this activity is about building personal wealth. And when you see that stock price rise after you've made an investment that you're absolutely confident on, it will become an addiction. I promise you that it will, and it will be something that will attract you again and again. So I hope this video has helped you out. If it did, please smash that like button and don't forget to subscribe. It really helps out the channel, and I hope to see you in the next video. Thank you for watching. See you next time. Bye bye.